And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. And we have quite a bit to unpack. It was the strongest week of the year, of course, following Tuesday's election results. So we are going to get into all of that. And then, as always, we will take a look at what areas are moving the most. I'm also going to share with you historical precedent. We're going to take a look at what happened after the 2016 election to give a little bit of a backdrop. A lot of those policies that were instilled back then in 2017 and on are in place still today. So you'll want to keep that in mind. And taking a look at some of the items elsewhere outside of the election that helped the markets last week, and that would be the FOMC meeting notes on Thursday, actually the press conference. This was after the FOMC announced a 0.25% decline in interest rates, and that was anticipated and it was well received. We also did hear from China as far as their stimulus package, and what they announced this past week was not well received. So a bit of weakness expected out of the Chinese economy. It's not as impactful, but it's certainly worth considering as we move through these markets. Last week, we did have select areas that really fared a lot better than an already strong market. We're going to take a look at that and why. And then you will want to know next week, we do have CPI and PPI data due to be released. We're also going to get October retail sales data next week as well. So let's go ahead and jump right in and take a look at these broader markets that are each now hitting a new high in price. And here we are. This is a daily price chart of the S&P 500. And as you can see, we had that gap up on Wednesday following the election, a nice rally on Tuesday going into hearing what may be the final results. And we did get that RSI now moving into positive territory. We had that MACD already in positive territory, but that black line up through the red does signal a new uptrend. We can use this period as recently as September to signal a new uptrend. Also, taking a look at those volume characteristics, nice high volume on that buying. And we did, of course, close the week at a new high. Let's go ahead and take a look beneath the surface. As mentioned, there were sectors that really came to life on the news. First up here is a view of those 11 sectors. And it's a 2-month daily price chart view. I add a relative strength indicator here, and it sorts these 11 sectors by strength. Up here in the left quartile are your stronger sectors relative to that S&P. And then down on the far right are weaker. And this is a progression that does take shape slowly. It's not whippy, so it's really quite helpful. What I will share with you first up is the fact consumer discretionary and internet-related stocks up here at the forefront, XLY, XLC. Now, these two areas had been strong going into the election. These are growth areas of the market and historically fare well under several of the policies that Trump had been discussing going into the election. Industrials, also nice jump up there. The group was up over 6%. That's relative to the S&P, which rallied 4.8% for the week. This is all about cyclical areas, economically sensitive areas that are also moving to the forefront here. Financials would certainly be in that category. We'll take a look at some of the subgroupings of these sectors in our next segment so that you can really get more refined as far as where that strength is shaping up. Energy up there, second best performing, up 6.2%. We'll take a quick look at that chart because we did reverse this downtrend. Nice high volume, a new uptrend materializing here with both that RSI and MACD. This is an area that fares well in a emerging or certainly strong economic backdrop, but also there's talk about inflation being driven higher because of potential tariffs that will bring imported goods at higher prices. So energy up here at that forefront. This is a newer development. And then also moving through tech, not terribly surprising, up 5.9%, a little bit more than that. NASDAQ gaps up each and every day. We're going to take a look at a couple of names that are really outperforming and why. Again, this is all about not only what took place last week, but also preparing you for what may shape up going forward. So let's go ahead and move through. Healthcare still struggling here. REIT stocks down at this lower quartile, and utilities. These are generally defensive areas of the market, but there are other factors at play here as far as why these groups are down in this lower quartile. And then consumer staples, another more defensive area, but quite frankly, a lot of these companies are coming in with not great numbers, and that would include staples and utilities, among also REITs as well. So let's go ahead and again take a look more refined. These are using ETFs that I find very useful. We have again a 2-month daily price chart view, RSI indicator here, and let's take a look. IGV, this is the software ETF, super powerful move. And for those of you not familiar, software, of course, very much a growth area in the markets. And when we have a period where taxes, corporate taxes in particular, are due to be reduced, that means more spending for these corporations. And certainly the spending is shaping up in select areas. So we're going to take a look at that as well. So we can also take a look at this super high volume here. We are in an overbought position on that RSI. Similar to any period, you don't necessarily want to chase stocks, but when we do get that initial gap up, this is something I've gone over in the last 2 weekly shows, where that intraday, whether it's 15-minute or 1 hour, can be really helpful as far as keeping you in so that you can capture more by way of gains. Let's go ahead and take a look at some of these other underlying areas. Small caps, the largest performer among those bigger indexes, and this of course is small cap stocks. They end at 8.4%. A couple of factors here that is driving this. First up, in a growing or expanding economic backdrop, small caps will fare well, but also a number of financial stocks are in this small cap grouping. I believe it's about 17%, and that too is helping propel these small cap stocks higher with IWM up here. From here, we can take a quick look at the weekly chart, and you'll see this nice base breakout that took place, and still relatively early on that weekly as far as potential further upside in these small cap stocks. Let's go ahead and move through, take a look. I talked about financials and bank stocks in particular. This was the best performing sub-industry grouping, up over 11%. And you can see that this super high volume, lots of conviction in that. This is all about Trump and a relaxation as far as oversight for these banks, so that less restricted, they are going to be freer as far as lending activity, is also a big boost here in a growing economic backdrop. Also here at the forefront, IBB, that is that biotech ETF, and it too performed well. It was up 4.1%. This is all about confidence coming back for investors and this particular industry group moving higher. Other areas you will want to be aware of that are not faring particularly well, certainly relative to the broader markets. And first up here is XHB. This is the home builders ETF for the S&P 500. This particular area is going to be impacted by the recently high interest rate backdrop and then weak earnings from several select names. Although I am on the lookout, taking a look at this black line up through the red, taking a look at this July downtrend reversal, as with a growing economic backdrop, I anticipate home builders to come back into play. Semiconductors performing in line with the markets. Let's take a look. This is last week's sharp pullback below that 200-day on heavy volume. Now, this week, we did see 4.7% increase in this index, certainly in line with the S&P 500. However, take a look. We really didn't get that high, exceptionally high volume, certainly not as high as on that selling. We did see that MACD get into positive territory, but it was not with any kind of real momentum. Likewise with that RSI, we can see it got up here above 50, but not a big push, trended sideways for the remainder of the week. Now, the semiconductor industry grouping is, if you were, I did in fact do screening on the group, and there are about 102 stocks that are in and publicly traded semiconductor stocks. And among those, only 50% are above their key 50-day simple moving average. And certainly, I'm sure you're very familiar, NVIDIA, there are the haves and have-nots. And this is what we're going to talk about in relationship to other areas of growth as well moving forward. Now, also taking a look at some of these other areas, we did see the yield on that 10-year Treasury pull back. We are still above that 4% level. Ideally, we do want to come in a bit more on those yields, and that certainly is a little bit of a battle at this point. But again, we are down at about that 4.3% level. Now, from here, what I do want to share with you is a view of the period the last time that President Trump was elected. What I'm sharing with you now is a chart that takes us back to November of 2016. Now, unlike this current election period, there was a pullback going into, there was quite a bit of uncertainty versus Trump versus Clinton. We can see that the markets did sharply advance after the results. So what we can also see is we had a nice rally going into the beginning of March. Now, what you want to pay attention to as it relates to these sharp rallies, this is the S&P 500. We did get into an overbought period in the end of December and then also into March. And both of those periods, I will mark this up, were periods of consolidation. So you can see when we get into that overbought position, it will potentially set the markets up for a period of consolidation, or in this case, a pullback. So that is certainly of note relative to where we are now. Let's go ahead and move a little closer as far as deeper into what took shape back in 2016 into 2019. So I'll explain what we're looking at here. This is called a PerfChart view from Stockcharts.com. Quite simply, we're looking at the NASDAQ, the Dow, and the S&P 500, and we are looking at it going from November 3rd to October, actually November of the following year. So this is 1 year of activity. And of note, this is what you will see no matter where you were to seek this information, that the NASDAQ growth area was pretty much far and away that top producer as far as results. Also, what you will want to take into account, I'm sharing with you that 2018 into 2019 bear market. I remember it well. Quite simply, back here in October, there was an awful lot of rhetoric regarding tariffs, and actually tariffs that were being enforced against China that brought instability into the markets. This decline shaped up with software stocks pulling back first, and then the remainder of that market going into the end of 2018 into the beginning of 2019. So it is something of note as policies take hold. It's not going to be a straight up and away because of a growing economy. There will be cross currents. Let's go ahead beyond that and take a look at a bar chart view of the broader markets. This is going back, looking at the 11 sectors, November 2016 till October of 2017. And again, that growth aspect to the market's top performer. Here we are with technology. It rallied 37% over that 12-month period. Also, the NASDAQ up 27%. Commercial services, this is going to be internet related, up 25%. and then we did see a move in materials. But of note was the fact that those financials really came on quite strongly. And what we can look at here, I can give you a quick tutorial on how you can do that change date function. What you can do is go ahead down and select start and end date. So we're very quickly here going to go ahead back to that 2016 period and take a look at KRE, and you will see a pretty significant move. Now that's the start date. From here, we will want to go ahead and put an end date 2017 and take a look at this November 9th. Also now KRE is displayed up here. And in fact, I'm going to go back just a little bit further here, and you can get a wider view as far as what shaped up with these bank stocks. So here we are with the period of October 2016 and taking us all the way into this bear market period at the end of 2017. That would have been 2018, but let's go ahead and take a look at these bank stocks. Sharp rally after Trump's election due to his more lax regulatory policies and also increased lending activity that was anticipated. So we had this big sharp gain in these bank stocks going into March, and then things got a little troublesome. There were comments that were being made. Trump was meeting with the CEOs of JPM and other major banking organizations, and not everything was as smooth as was initially thought. So the reason I'm pointing this out is the fact that while these groups may have sharp advances in the beginning stages, you will want to continue to stay on top of things. This is a KRE, that regional banking ETF. We did get that RSI down below 50 with a break below that 50-day simple moving average negative RSI, which preceded this multi-month decline. So also from here, I mentioned that I would share with you areas of the market that really outperformed this week. So let's go ahead and take a look at two stocks in particular. First up here is Palantir, PLTR. The company did release their numbers, super high volume here, and the stock on the week, we'll take a quick look at that weekly chart here. It was up 39%. So what you want to do here is use historical precedent as your guide. And we are on that weekly back up above 80. So very definitely overbought at this point in time. But of note is the fact that the stock was up over 39% on the week. Not only did they come in above estimates, but they guided growth quite a bit higher going forward. One other name that we will take a look at, Palantir, has been on my MEM Edge report. APP is another one. Applovin, that had a huge gain this week. Let's take a look again on that weekly. We are up 77% for the week, and that really is surprising me, as you can tell. I do own the stock, so that's a pleasant surprise. But we are up here at 90, almost 93 on that weekly RSI. So on the lookout most certainly for a pullback. But the bigger point in highlighting those two stocks is the fact that both companies have uncovered very valid ways to monetize AI. So if you were to look at App, I'll tell you a little bit about the company. They do offer online gaming as well as online advertising. And what the company has done is developed a program that allows them to use AI to provide targeted advertising in that gaming space. So huge growth. Not only did they come in well above estimates, but management guided very high for estimated growth going forward. So you can see that sharp advance. Let's take a look at PLTR. And this is another AI-driven company. This company, when they came out with their earnings, their CEO did say that we are now in a winner-take-all AI economy, and the divide between the haves and the have-nots is widening. And the reason you want to pay attention to this is because when we are entering a new area of monetization, a new area of expected big growth, you want to make sure you're in those leadership names. You may feel that you may have missed the move, but I will tell you, having lived through many cycles, those leadership names that emerge originally often go on to continue to lead the markets. And I will leave it at that. Everyone have a fantastic weekend. Use that like button if you like what I've shared with you today. As always, any questions are welcome. I'm going to look for you here again next Friday.